So today we're going to take a quick look back at our recent FXB trade, why we made the trade and how we managed the trade for success. So here's the chart of FXB at the time of this trade. You can see it's kind of gone down, it kind of gone back up, and it kind of was staying within this range. So right here, you can see down here, this is volatility. There was kind of a bump in volatility. So around this day when the volatility spiked, that means the option prices, relatively speaking, went up. We like to sell expensive things. We decided to make a trade on this day right here, which turned out to be January 16th. So let's go back to the trade page on January 16th right here, and you can see FXB was the stock we were trading, and it was right around 125 bucks. And where do we start? We always like to start as close to 45 days to expiration as possible. Never less than 30, and if it's between like 61 and 29, we're always going to go to 61. But in this case, 30 is totally doable, but obviously 58 is kind of more within our range as far as it's close to 45 as possible. So we're going to start with the 58-day expiration, which was the March 15th, 2019 expiration cycle. And when we open it up, we get to all these strikes. And what were we looking to do? Well, we're looking to get equidistant away from the stock price and collect anywhere, because it's a $2 wide iron condor, from like 66 to 80 cents roughly is what we're looking to do as far as credit. And since I've already put the trade here and pre-populated it, you can see what happened was the way we did that was we sold the 121 put and we sold the 129 call, which made the stock price roughly equidistant between the two, right? It's about $4 below our call price and about $4 above our put price. So we got the stock right between our two strikes. And then to create an iron condor, we bought $2 away the 131 call and the 119 put, which defined our risk, turned this into an iron condor. And you can see here we collected 75 cents credit when we did that, which fit our rules. We wanted to be between 66 and 80 cents. So again, this fits our rules. So now we go back to the chart and we actually can see the visuals of what we were doing. So here's what the stock was when we made this trade. And again, our short strikes were 121 on the put side and 129 on the call side. And all we're looking for is for the stock to stay between these two strikes. And if it does, over time, eventually we'll make some money. So let's follow this trade forward and watch what happened. So we start moving forward day by day, and you see it starts to go up, no problem. Starts to come back down, no problem. Still between our two strikes. And right here, we decide to take off this trade and manage our winner for a profit. So why did we close the trade here? So let's go back to our trade page. And again, here's where we started, the 58-day cycle. Remember, it's 15 March 19 with 58 days. And we closed this on February 15th. So let's move forward there and see where we were. So you can see, same expiration cycle here. This is one we used. There's still 28 days left on this expiration cycle. So why did we close this trade early? Well, if we follow our rules, our management rules are we like to close our trade for about 50% of max profit. So in the case of this trade, we sold it for 75 cents or $75. And if you multiply that by 50%, you're looking at a roughly $38 profit, would be about 50% of the max potential profit. So if we go down here on February 15th, you see we had a profit of around $42. So we closed this trade early. We managed our winner, because when we manage things early, we have a much better chance of them being successful. And we're perfectly happy to collect roughly 50% on all our trades, because that increases our probability of profit or our chance of being successful. And in this case, we managed to close this trade in only half the time. We got to half the profits, and we're perfectly happy doing that, because as it gets close to expiration, we don't really know what's going to happen. We like duration over direction, which means we like to have time to be right. There's still plenty of time left in this trade, but things can go wrong from here on forward. They can still go right, obviously, but we're perfectly happy closing this trade at a 50% winner, which is what we did. And that is how we made this trade, why we made this trade, and how we managed this trade for the best probability of success. So if you'd like to learn how to trade alongside me, you can click on the udemy.com link below. It'll take you to this course here. It is a private course on Udemy, so you'll need to type in this Trade 2019 to enter the course. And if you use the Video 49 coupon code, you will get half off this price and get it for only $49.99 for 2 months. So just click below here, type in this to get into the course, and please use this code to get at least half off the current price. Hope to see you there.